Chapter 5, Deductions for and from AGI. Today we'll be discussing 5.7, Calculate the Itemized Deduction for Taxes. This is the second item that shows on the Schedule A. Taxes. Taxpayers are allowed to deduct certain state, local, and foreign taxes paid during the year. The purpose of the deduction for taxes is truly the burden of multiple taxation of the same income. Taxes are deductible when they are paid, regardless of what year they relate to. For example, if you pay your 2019 and your 2020 real estate taxes at the same year, say January the 1st, then you would deduct the 2019 and 2020 taxes in 2020. You do not deduct them according to which year they actually go to. Examples of deductible taxes include state, local, and foreign income taxes, sales taxes in lieu of state and local income taxes, state, local, foreign real property taxes, and state, local, and foreign personal property taxes. The aggregate amount of the deduction for state and local real property taxes, state and local personal property taxes, and foreign income taxes cannot be greater than $10,000 if married filing jointly. In the past, before the TCJA, there was not a limit. You could deduct fully all state and local income taxes that you paid. If you itemize and you receive a refund in the following year, you have to declare as income in the subsequent year. Sales and use tax may be deducted in lieu of income tax if sales and use tax is greater than income tax. And the IRS provides tables to help you determine how much you estimate in sales and use tax. You don't have to actually keep track of that per year. Real property taxes are deductible and personal property taxes are deductible. Non-deductible taxes include estate taxes, gift taxes, Social Security, and excise taxes. A note about the real property taxes. If you have property taxes that are related to a Schedule C, a Schedule E rental property, or Schedule F, you may deduct those taxes in full on each of those schedules. We're only talking about a $10,000 limit as it applies to deductible taxes on your Schedule A. Example, how much can Colleen take for taxes as an itemized deduction in the following scenario? Colleen amends her 2016 state tax return and has to pay an additional $843 state income tax in 2018. The $843 consists of $750 of actual tax and $93 in penalties and interest. Her current year state withholdings is an additional $660. She also paid in quarterly estimates for her state taxes. She paid $200 on April 15th, June 15th, and September 15th of the current year, and $200 on January 15th of the next year, 2019. Also, in January 15th of 2018, she paid fourth quarter estimates for her prior year of $155. So let's take a look at this for a moment. Estimates. Estimates are due in quarters. You pay the estimate for the current year tax period in April, June, September, and then January of the next year. So that's why her January 15th payment was different than the other payments made during the year, because that applied to an estimate from the prior year. So, of the $843, she can deduct $750 of that as taxes. This $93 in penalties and interest is not deductible as state income tax. Her withholding for the current year is $660. That is includable in her amount that she's able to deduct. Her quarterly estimates, $200. on April, June, and September 15th. Those $200 would be deductible in 2018. The one she makes in January the next year would not be. The $155 that she paid in the current year for the prior year estimate is included. So she's deducting the actual amounts she paid in 2018, limited to $10,000. So she's allowed to deduct $2,165. The $750 from the amended return that she actually paid in taxes, her withholding that was withheld from her paycheck, her 3 estimates for the current year, and the 1 estimate for the prior year that she paid in the current year. It's also to note on taxes that you may not deduct federal tax paid. We're talking about state, local, income, sales, foreign taxes, property taxes, real estate taxes, but not federal income taxes. Real estate taxes. Property owned on taxes is deductible, even if it's taxes that you pay on a second home. Again, if it's taxes that's on a rental property, then you may fully deduct them on the Schedule E. There is no $10,000 maximum on the Schedule E for real estate taxes. The $10,000 maximum only has to do with the Schedule A. Oops. When you sell a property, the buyer and seller should allocate taxes based on the number of days each party is owned. This occurs on a settlement statement that shows how much is deductible per each person. It'll tell you how much. So if you're the owner selling it, you pay taxes up until the day that you sell it. And then if you're buying, you start with the day it's bought through the rest of the year. Fees such as homeowners' dues are not deductible as property taxes. Personal property taxes. To be deductible as personal property taxes, they must be levied based on the value of the property. Taxes of a fixed amount or those calculated on a basis other than value are not deductible. For example, in North Carolina, when we renew our taxes on our vehicles, we pay the registration fee and then we pay a tax based on the value. You can only deduct the tax based on the value. You may not deduct the registration fee. If that tax was based, say, on the weight of the vehicle, you would not deduct that. You can deduct taxes that are paid on cars, boats, trailers, etc., and add those together as the personal property amount. So here's a comprehensive tax deduction example for you. Selma has an AGI of $31,300. She itemizes her deductions and therefore deducts the allowable amount of tax. Her federal income tax withholding for the year is $2,150. Her state income tax withholding is $1,500. Social Security taxes are $1,768. Real estate taxes on her home are $3,300. Sewer fees are $867, and she pays an auto registration of $210. Of that $210, $180 is based on the value of the automobile. So, how much is she allowed to deduct as her tax deduction for the year? $4,980. She's allowed her $1,500 in state withholding, the $3,300 in real estate taxes, and the $180 that's based on the value of the vehicle. She may not deduct her federal income tax withheld, her Social Security taxes withheld, the sewer fees, or the part of the auto registration that is not related to the value of the vehicle. So her total itemized for deductions is $4,980, and that is below the $10,000 limit, so she would be allowed to take the full $4,980.